Well, welcome to another episode of the Sankofa Exchange this month. This is the first one of March. So every month we do a forum where we allow people to come on and talk about what they purchased throughout the month. And we break it down, analyze it, and give feedback on the trade. In addition to that, we do our street slang market analysis and we go over our trades. So welcome to Jamario and Melita. Thanks for joining.
Thank you.
Thanks for having us.
Thanks for having us. Exactly.
Exactly. Of course. Um, so I guess Jamario, you want to start us off?
Yes, sir. I will go ahead and present. We've got a couple of slides, not too many.
Okay.
See if I can get this right. All right. Can you guys see street slang?
Yes, we can.
Yes.
All right.
I
So
wanna
only a
know.
couple of slides today, not a whole lot. We do want to touch base on what happened last week, though. Last week was a much better week than the previous week. At least we had two indexes in the green last week. We have the SPY up at almost 1%. Dow Jones up almost 2%, which is very, very nice. Small caps down 0.5%, and the Qs, the tech heavy Qs, are down the most at still 2%. It was a lot worse than that, midweek though. So we fought back a great bit last week to end, not on a positive note, but it was better than it started.
Less negative.
Yeah, less negative. We'll say that.
The IWM though had been like outpacing everything else, so that's a small pullback given the amount of outpacing it's been doing.
Yeah. Oh yeah. Still doing good. So let's take a quicker look at the Dow. So let's see here. Where's March? This is March here. So this is what our action for the first month of March. Well, you only made a small dip below our zone here, so it's not terribly bad. It's almost a sideways action. Monday's action here. Here is Friday's action here. So we started here Monday, and we ended here Friday. So the same zone we're stuck in pretty much. Not necessarily bullish or bearish. I do like we didn't revisit these lows. I do like that. It's not that bad actually, considering the week we had. That's not that bad.
Sideways price action. It's pretty good.
Not that bad. And what I did Friday, I wrote another. This was our zones from the previous week. We got our 30,000 zone, 31,000 zones. In between that zone is the halfway point. The halfway points are utilized to find great bounce opportunities, and that's exactly what happened here. The Dow Jones bounced once they hit 50% of this zone area here. Very nice. Out jumped off the lows on Thursday and again on Friday. So that's pretty nice action. It could have been a lot worse. Just taking a deeper look at it. Still not that bad. I like how it came off the lows on Thursday and recouped a lot of those losses on Friday. So it's hard to find positives in this market, but this is a lot better than it could have been. I just, that's all I can really say about that. What about you, Thomas?
Yeah, I mean, like I said, the Dow held up pretty well throughout all the last. I'd say the last 3 weeks. If you really look at it, it did fall below that third range right there. But then in the second range, it's held up there. So it's not being punished the way, like you said, a tech heavy NASDAQ is, which is and if you go back to the week before the 2 weeks before that, I mean, it held up at that third like range where you have
here
that range, all in there. That's quality. It dropped because this past week it's just been last Friday to this Friday has been really treacherous. But even still, looks like, what is the yellow there? Is that the
That's the 50.
that's the 50 period?
Yeah.
Yeah. So it still hasn't closed. I guess you could say that one day, what is that, Thursday, it might have closed below the 50 period.
Yeah, briefly, right?
Slightly.
Yeah,
Slightly.
very, very
Yeah. So and then a bounce. So, you know,
it's trying
could
to
be a
hold.
dead cat bounce.
Yeah.
We'll see.
Oh yeah. I was thinking that this week was the dead cat bounce. We got the, a drop, small bounce, dead cat bounce, and we dropped
Yeah.
it again. So I'm hoping this is it. We don't know till next week.
Yeah, we'll see.
The tech heavy
Delicious.
cues. Now this guy, still the last 5 days, we broke below our number one zone from the previous week, and we touched this zone here, the $300 zone. We went below $300 at one point. I think the low was like 298 Friday. But we recouped those losses. Got back to the top of Thursday's price action. So we fought enough to take out Thursday's losses, but not Wednesday. So we got a lot of work to do in the NASDAQ next week. We got to retake this zone, the 312, 314. We got to get back up here to show any kind of bullishness. We've got to. If we don't, we'll be back in the 300s again, back below 300 if we
below 300. Yeah. If we can't sustain it above there, I think we go below that. I think the comp is did it go back above 13,000 on Friday? I think it did.
So. I hope.
Yeah. If we can't maintain that, it's going to be pretty rough.
Yeah, so the Qs have a lot of work to do next week. A lot of work to do. So the SPY, let's take a look at the SPY. So the last 5 days for the SPY. Once again, it touched the number one zone here, the 376, 377. Hit that zone on Thursday, bounced up on Friday. A pretty good move. Back above its 50 period moving average. So a little bit stronger than the Qs, but still being challenged nonetheless. And if we take, this was Monday's move up. If you hit 50% of that move, we're approaching the resistance of a 50% retracement of Monday's move up. So I should have wrote this resistance zone here also, Thomas, about 385. So we'll see if it kind of suffers or lingers there next week. Let's go a little further out. Let's take a look here. So right now, sitting in between the number one and the number two zone, sitting right in between them there. So hopefully we can take that out next week and then get back up here, that 389, 390 zone. I hope we don't get down here. There was the 365 area. But you can see another 50% move off the zone, the number one zone here and this zone here. And the 50% line in between those two zones is a very popular spot for stocks to bounce. That 50% of a zone move or even a move like this. This was what was that? That was last week before last. That move down, a 50% retracement of that move is highly likely, and we almost did it that next day. So whenever you get a big move up or down, there's a high likelihood you get a retracement of that move.
So, Melita, are you familiar with retracement and these zones?
No, I actually just repeated the word retracement. Could you give like just a quick like touch point on what retracement means?
Retracement, let's say for retracement for a down move, let's take this bar for instance. This move down, 50% of that move would be here. We'll draw a line. It's highly likely for the next day to recoup 50% of this move, which is what happened. This was a 50% move, almost 100% of this down move. The up volume brought it up, recovered all of that move. So that's 100% there. But what's coming is at least a 50%. Let's find another day. Yeah, this price action here has been kind of too volatile for the 50% retracement. You've been seeing 100. This is a total takeout. things are too volatile now for, to rely on a 50% retracement. So I wouldn't rely on that too much right now, but in, previous price action, 50% retracement of a move is highly common. This is one here. That's a down move, and we retrace 50% of that move, meaning we recoup 50% of it that previous day or the next day.
Okay, so that makes sense. I understand. So it's kind of like in whatever direction is it in whatever direction it's happening, if it goes back up, then it's retracing. It's like retracing your steps.
That's it. That's
it.
That's
Got
exactly
it.
what it is.
Okay.
And that happens a lot, that's
And it could be up or down.
up or down.
Yeah.
You'll see
But we
that.
like when it goes up, right?
Depends on where you at and what position you hold. If you're short, then no, you do not like when it goes up.
Okay.
Sure. Is this one of your favorites, Thomas? The IWN? You like that?
Me, Thomas?
Yeah. I think you're partial to it.
No, I like the IWM because I think these are the stocks I think a lot of people use every day, or interact with every day unwittingly.
Yeah.
You know what I mean? So small caps and they represent more of the small business economy. Like it's more, how can I say it? It's more reflective of how the economy is doing.
More so than the S&P.
More so the S&P because, those are really large companies, right? So these guys are small and they reflect, and like I said, I think they reflect a lot closer to Main Street than let's say Microsoft, how Microsoft is doing.
All right. And IWM's doing good, man. It bounced off the 50 here Thursday and Friday. So pretty good, nice price action there. Still below the 20, but we're still making some progress.
One of these days we got to do a chart with like charting out the IWM, the SPY, the Qs, and the Dow just to see performance. So I think that would help people understand like which group is performing better.
Yeah. And it's going to change throughout the year.
Sure.
IWM is looking very, very good, man. Even in a negative MACD state, still holding up pretty well.
That's what I'm saying. Like this is on a strong uptrend.
Oh yeah.
Strong.
Not bad at all. All right. Let's see what we got next. Just a little quick sector overview. Let's see here. For the month of March, the month just started, so it's not a whole lot of data. The biggest winner so far is energy, though. 25%. That's amazing for 1 week. The biggest laggard.
That's crazy. That's crazy. That's crazy.
That is.
Oh my God.
Almost 4% on Friday.
And I think a lot of that is old fossil fuel energy. That's not renewable. Because I was watching some of the renewables that's being driven by the Exxon Mobil, the Chevron, Marathon Oil. I did a little, that helped me out. I made a little bread there. That was one of the, so I did play that, but not nearly as well as I could have, apparently.
Yeah, energy's looking good, man. Still leading 3 months, almost 40%. Wonder how long it's going to last, or how long you think they're going to be leading.
Here's why I think it could be leading for a little bit longer. It's particularly two things. One, as long as the NASDAQ and is going down, a lot of those renewable energy folks are a part of. They have this tech. They're in the NASDAQ. And they get sold off right along with Tesla and NEO and all those folks. Plug Power, like a lot of those folks don't trade with the fossil fuels.
Yeah.
So as long as they're being sold off, I think fossil fuels can do well. That's number one. Number two, I think fossil fuels will do well because we're heading into summer. And until more people turn over to having electric vehicles, the demand is going to be there.
Yeah.
The vaccine, the summer, these checks that's being things open back up. They just approved $1,400 checks to folks. So people gonna be out and about, and whether you drive an Uber, they're buying gas, or you driving yourself, you know.
Yeah. Well, last week was a much better week, y'all. Much better week. We had more advancers than decliners across the board. You know, more new highs than new lows across the board. And our up volume outpaced our down volume. So it was a much better week than the previous week. Me personally, I don't look for tech to lead, but I look for it to find its footing here. If the 10-year fears can subside, we're still waiting on that. It's still a fight with the 10 years in the tech industry. Still volatile, so wait it out. Or, you know, if you're confident and pretty nimble, you can buy the dips, but you got to get in and out quick. You don't want to hold anything long period right now. Just the market's lost a lot of confidence, so just be careful, be nimble.
I wouldn't even say buy the dips. I'd be like trade the dips.
Yeah, I like that. I should have put that in there, trade the dips. It's kind of hard to hold anything right now.
Yeah, I did hold one thing square over the weekend. Yeah. Because it just had such a powerful move off the lows, and I got a good price. But for the most part, I'm gonna set my stop range tight tonight and take whatever I can, because I just don't know what you just. This market is treacherous.
Yeah, it doesn't mean don't lose confidence in stocks. We're not saying that. Just be careful.
Yeah.
Just, you know, be mindful that you may lose a little bit of money on what you put in the market right now. You may get it back, but you may lose it, you know.
Over time, you'll definitely get it back if you're buying the right thing. Yeah.
Just be careful. And this is the guy that's been causing a lot of our troubles, the 10-year bond yield. It went up 5% the week before last and went up 6% this previous week. So still increasing. Broke out of our resistance zone from last week. It broke out of that. Man. So we hope it retreats a little bit, but it is in an uptrend. So we just got to see what happens next week. The good news is, you know, tech started to come back on Friday in the face of rising yields. So
yeah,
there's a little bit of there, a little bit. But it's still outpacing everything else for the week here that we tracked for this week. I didn't track the commodities. I'm not sure if oil went a little higher. I'm not sure.
I would bet oil went higher. I don't know if it's higher than the 10-year, but higher than everything else.
Yeah.
In order for the XLE to go up that much.
So for all of us tech lovers, we need this 10-year bond yield to
chill out.
Yes, please. Please. So a couple of the market movers from Friday, Palantir still on the list, Apple still on the list. So pretty good time to start looking at those, just trying to find some nice levels to get in, but be mindful that you may lose a little bit in the short term. So a couple of, you know, Fords on the list here now. A couple of the airlines, we got the cruise line. So there's a lot of things moving.
And by market movers, we mean volume, from a volume perspective. Yeah. Melita, yes? You said you joined. You said you purchased something. What did you purchase? We can kind of go to.
I actually, because I initially remember, like, I think was it either a month ago or 2 months ago, I told you that I had BP.
Yep.
So I got rid of it, and then I got it back. I got it back again.
Okay.
What made you buy it back?
So it started dipping, so it was cheaper. So I bought it while it was lower, and then just like what you were mentioning before earlier, that with the summer, like starting to get warmer, the vaccine is happening, people are going to start going out and consuming more. So gas prices I'm noticing are starting to gently increase. So I thought it'd be a good time for me to like purchase some more. So since I've rebought it back, it's gone up 20.7. I've gotten 20.75%.
Good trade.
The price of it right now is, I think it's at 20.77.
Hey, Jamario, can we pull up that chart?
Sure, my man. Sure. Let me pull this over.
Let's pull up the BP chart.
26.96 a share right now at close on Friday.
That's it?
26. Yeah, no, previous close 26.77. Sorry.
Okay.
So where'd you get in?
Hold on, let me go back to a different part. Hold the line. I'll still try to figure out how to read things on this app.
BP looking pretty good.
Okay.
That's a good chart.
I don't know how to tell what I bought it at.
Is the blue line the 20 period?
Yeah, 20, 50, 200.
Yeah, I think I bought it at.
Now you got a crossover.
Yeah, 27.65. I think it was like 20.
Wonder how much can run.
That's why I'm.
It's approaching 52-week highs in the 31 area.
Mm-hmm.
Yeah, you still got a little room to run to get there though.
Yeah,
it's about a solid 4 points.
Mm-hmm.
Looking good.
I got it at like 20, something like that. 20. I'm trying to figure out how to figure out how much I bought it for on this little chart I'm looking at. I'm on my phone.
Oh,
Either way,
all right. We'll just wonder.
That's a good trade. I don't see no trouble till about here. To 28. What's this? 28.
Mm-hmm.
That's no struggle till then.
Unless all of a sudden people get less interested in energy.
Yeah, and then you got this here to fall back on. I would say this zone here you will fall back on. It may drop there eventually and bounce up again. That's nice. Mm-hmm. Nice trade.
Y'all teaching me something.
What's the 200 period? What's that?
It's at 21 right now. The low is 200. But you got all these in front of it. It shouldn't drop that low. It shouldn't. But
I'm gonna put this on my
on your list.
My radar.
Yeah. Another one that I have that's doing pretty okay is JetBlue.
What's their symbol?
JBLU. Yeah.
So it's that. So when I bought it at, okay, I'm seeing now the column. It's $8. I bought it at $8.02 and it closed at $18.62.
That's a good
nice.
Mm-hmm.
That is a good one. Yeah. What's the?
I mean, outside's starting to open a bit.
Yeah.
I'm sorry for interrupting, but what was the first one that she mentioned?
BP.
BP.
Oh, BP.
British Petroleum.
Okay. Yeah. Okay, gotcha.
I could put it in the chat.
It fought back on Friday also, JetBlue.
Mm-hmm.
Dropped to 16, fought right back.
Yeah.
Now what I see though, it's approaching 52-week high, so it might slow down close to $19, $20.
Okay. And you can tell it's slowing down right now.
Yeah.
Look, it's basically trading sideways right now.
And then we've got
about the last week and a half.
Might get a crossover here pretty soon.
Mm-hmm. For sure.
Even still, it shouldn't drop that much if it does drop it. That's not a bad looking chart.
There was another one that Thomas mentioned to me a while back. APHA.
Oh yeah, Afria.
Yeah, Afria. So I bought it at $4.70 and it closed at 16.
Whoa, look at that. What happened here?
Yeah, that was Wall Street bets.
I got you. The Tilray situation.
Yes.
Dang. So who bought who?
Tilray bought, they're merging, and the stock will eventually be Tilray.
Okay.
I like this here. I hope it holds this bottom.
Oh, this the 50
off there.
Yeah.
It's trying to fight through this downtrend. It's trying to fight.
It fought back off the 50 though.
Yeah. It's not bad.
Interesting.
$16. Okay. You're doing some good work, Militia. You're doing some good work.
I mean, sometimes I'm like, Thomas, can you look at this? He's like, sure, in the middle of his trading some days. Lowest text messages up.
That's some good
But yeah,
stuff.
I mean, I like a conversation that I was having with a couple of other friends is that, you know, the stock market, like I had someone probably about 2 years ago talk to me about the stock market, and he was investing and he was like 125, 150K liquid because of it. And he was like, you know, don't be afraid to put money in and lose a little bit. Like, it's okay. Like, you'll get your money back if you start learning more about the charts, learning like how things that are happening in the news and like with the economy and like energy and stores and all of that type of stuff. It'll start getting you more comfortable with understanding, okay, like we talked before, like I bought Lululemon. I buy Lululemon all the time. So why not buy the stock? The stock is expensive. It's like over $300 a share, but I got in when it was a little, just right at 200. So you know, the money is just happening for me in that stock. So I'm like, all right, let me just keep buying it, even though, you know, it's expensive. Let me just keep putting a little bit here and there each month into it so that I can start building my portfolio up and not worrying about, oh my gosh, I lost like $100. Just let it stay. And then just kind of get the emotion. I get the stomach and the emotional fortitude to kind of let things keep happening.
Yeah.
That's kind of where I am. It's like, okay, well, if I have an extra $200 or $300, you know, I'll put it in something that I know that may be moving. And then if I need to just do it short term, take the money out once I've gained some, take my profits, I think you say sometimes, Thomas. But, you know, just get comfortable with it, because I realized, okay, if I invest $500, I might lose 100 of it. I might lose 200 of it. I might lose half of it. But if I can stomach, you know, losing a little bit to gain a greater bit, then that's where that's where my mindset kind of is right now.
But yeah, and then the other side of it sounds like you're investing and you're not really trading, which is good. You know what I'm saying? Like you're buying, like say you bought AFRI at like $4 and some change or whatever. Which seemed, that would have to be like, I don't know, almost 6 months ago or 7 months ago. So like, so to me, that strategy works a lot better when you're investing small amounts. One thing I do want to get us to stop saying is that because the stock is $300, it's expensive, because that tells me that we are thinking from a perspective of consumption, right? Like, I don't want to spend $300 on that, right? But we need to start thinking in terms of value and acquiring assets. And so if for whatever reason, the stock is $350, or I think Netflix is like $500 or $400, whatever, depending on how bad this week's trading was. We have what we have is, you have to determine whether or not it's actually worth that amount. So there's a valuation fundamentally that's associated with it. So if we're going to be long-term investors, if that's your goal, then you need to be thinking in terms of, okay, is it really expensive or is it actually cheap? And that's why you have the PE ratios.
Yeah.
So if you're going to be doing long-term investing, then you look at its PE ratio relative to its peers in the sector, and that's how you can determine if it, and I'm just using this as an example because I don't know what it is. If I think you're talking about Lulu, if Lulu's PE ratio is 15 and its peers is 7, then you might say, oh, it's expensive. And then you might start to look for, is it more expensive relative to its peers? I mean, does it deserve to be relative to its peers? Its PE ratio is twice as much, but does it deserve to be? Are they growing sales and profit at twice the rate of its peers? Because then it could deserve that stretch PE ratio or double PE ratio. So you think differently when you're long-term investing. That's my first point. And secondly, we want to use the right language. It's not necessarily expensive, because you could buy a stock that's $5 a share, and that could be really expensive. It could really be only really worth $1 a share. So it's just a habit to get into.
Okay.
With a break.
Yeah, it'll probably bounce back. It's not gonna stay here for long.
Yeah, what is it at now?
293. It's right under 300. It's
oh yeah, Melita, you still to the good. You still 100 points almost to the. I mean, you had made a 50% move almost, over a 50% move. You said you bought it around 200. So.
Yeah, she on sale now. It's on sale.
yeah, exactly.
That's really a good price for Lulu.
It is. If it I've been watching it, and I'm like, okay, if it goes down just a little bit more, I'm gonna push some more to it.
I like how it held this year. That level from long, what's that? From September of last year, it tried to hold that. Nice bottom right there. Hopefully that's the bottom. Come on back up, baby. Come on back up. That's what we want.
Let's go.
I'll be in here cheering for stocks. I'll be like, yo, come on, man. You can do it. You can do it.
That's what
all your friends. Yeah. But I mean, I try like you we were saying, like I try not to get too I'm not trying to be so worried about it. I'm like, okay, well, I know at one point I bought it at $200. So if it bottoms back down to 200, that's my time to buy some more, because I consume it and it's going to continue to do what it's going to do.
Yeah. I mean, I don't think because outside opens up, people are going to stop buying athleisure.
Nah, they're not.
Well, that's what everybody's wearing athleisure now. So because it's comfortable.
I think that trend was already forming before. I think that trend was already well formed before COVID. I just think COVID accelerated it, because you legit don't. Who wants to be in a suit in front of their Zoom camera? So suited and booted.
Here with it on right now. This is our comfortable clothes, but yeah.
Look at that, Thomas. 5 in that zone. Yeah, it's not gonna.
Oh wow.
It ain't gonna stay here long.
That's good. That's a good zone. That's a strong zone.
Yep. It is not gonna stay there long.
What level is that? 297? 293?
292. Let me zoom in. 289. So 289, 290. Right now.
Man.
It's been holding that zone for a long time though. Oops. Well, y'all saw it. I can't get back to it now.
There you go.
Cool. All right. Good stuff. Check out Jamario, what you got? What are you holding?
What am I holding?
Okay, let me ask another question before we go to that. What could she do from an options perspective? Not that she's ready to do options, but just so we can make sure we get that kind of options content in there.
We can see what it looks like.
Yeah.
Try to look for.
Since we see that that's a very popular level for Lulu in terms of when buyers tend to step in.
So the closest options to that level, to the 293, they have a 290 and a 295.
What about the 290? Because it was like 289 was our level when we looked.
That 290 is expensive. It's $12 per. So
gosh,
we are expensive because the stock is so expensive.
Okay.
So you have to go. Woof. Yes, it's expensive. One contract is $1,000, but anything over 300 would make you profit.
So break that down. Why is 300? Oh, I see. Break that down real fast.
Yeah, it's 300 because you're going to add the price of that option, which is $10 to your strike price here to the 290.
Oh, I thought it was 12. It's 10.
Well, right here is that's the last sold price 1260, but it's going to fluctuate.
Oh,
915 and 1260. That's
gotcha.
the spread for that.
So the midpoint, that's a spread. Gotcha. So you go at that midpoint.
Yeah, or you try to. I mean, that price is going to change. This is going to change right as the price changes.
Mm-hmm.
So you want to try to get around
the last trade was at 10-11 looks like.
Yeah, 10-11 was the last trade. Yeah.
Mm-hmm.
But it's still that's kind of expensive. $1,000 gets you that exposure, but anything over 300, you'll make a little bit of profit. And we've seen that it bounces off its zone a lot, so that's not a bad one to look at right there. And
that's not a bad trade, and and
it expires.
I mean, it's expensive.
First.
How much do you make over 300? It gets to 305.
305. You're looking at 756.
700.
756.
Man, that's not a bad.
It's not, and since you like it so much, what you could do is go far out. You can go. Let's go the summertime, June 21st. Yeah, that's too far out. It's got to go up to 320. So you want to go out that far?
Maybe April.
Let's take a look at April. April 1st. About 3 weeks. Yeah, it's costing a lot more. It's 17 a piece. So yeah. I mean, since the stock is expensive, relative to other stocks, price, the options are going to be kind of expensive.
Gotcha.
But that's for the 90. The 95 is a little bit cheaper. You got to go out a little bit further. Let's do one of the 95s. It's going to cost you $865. And you got to go to 303. Anything over 303. But also what you could do is what's called a straddle. I doubt it goes down, but if it goes up or down, you would make a profit. So anything under 276 or anything over 313.
But you actually, do you end up you cut into your profit on the upside to get that profit on the downside? Yeah, because that's basically a hedge.
Yeah.
Yeah.
Yeah, but those 290
and that's pretty far. It would have to go down. So that would mean the market would have to really capitulate, because you're talking about another 20 points. Now
it did hit 269 on Friday. I doubt it goes there again unless something major happens.
Look at that comeback though. That's a huge
right
back to the levels you pointed out.
My God. That's almost $40, man.
Y'all better buy y'all some Lulu.
I don't even wear Lulu, but I'm about to start walking around here.
They have been so.
You got it through X or Y, consumer discretionary.
Yeah. Okay.
I don't have it directly though. That's a good move.
Man, that's a lot of bread. Okay. So I definitely want to break down some of these look at the options aspect of some of these, because I think the one thing everybody's lacking besides you, Jamario, is options and Skinner knows.
Yeah.
So definitely want to start breaking this down and looking at things, just having a conversation. Desmond, what are your thoughts?
I'm sorry, I'm at the counter. I'm at the counter in the store. That's why I had my my stuff off. I'll give you about 5 or 10. Give me about 5 or 10 more minutes.
That's cool.
All right, I'm still listening in though.
That's cool.
All right, thanks. Sorry.
Okay, so let's go to you, Jamario. What you holding?
I mean, I'm still holding SMH, man. The chips. Let's go take a look at it quick. It's been kind of weak right now, but it's contains all the chip companies, and I'm a semiconductor lover. I love the semis, man. It fought back also, but it's Do
you think now's a good time to get in on those because of just how much pressure is being put on them because of the backlog?
I do, man. Anytime it shows weakness, people usually pounce on it. So it shouldn't stay here long. I mean, as you see, bounced off here, getting ready to bounce here. I mean, it tries to stay off that zone also. I mean, tech is kind of getting hit right now, but this is a subsector of tech, sector that's not really hurt so much by the interest rate. So just have to see, man. I like it. I'm a semi lover. But
that level is holding.
It's trying to. It's trying to.
See, the MACD is pretty bad. It's pretty damaged.
Yeah. Oh yeah.
But I like how it's. I like that.
And the chips aren't going anywhere. The chips aren't going.
No,
they're
you forget that. Yeah, you forget that. That's only going to expand. So, and I think they haven't even begun to get down in the car market, because once we start doing all this electric and autonomous, it's night. The autonomous driving will drive these stocks to the moon.
Yeah.
I mean, that's chip heavy for real. And probably NVIDIA. NVIDIA's got the most AI stuff.
Yeah. That's what's boosted a lot of these companies, man, having AI capabilities built into their service. Those exploded multiples, man. If you just mention AI in your service, man, your startup is instantly 20, 30x, man. Just mentioning AI. It's crazy, man.
So, okay. Let's just take a look. I'm holding Square at the moment. That's my largest position.
SMH is my largest one. SMH and ARKK. Square. Let me
you want to look at ARKK? Let's actually take a look at ARKK, because that's
been heard.
Kathy is.
It's been heard. Look at her. It's almost got a head and shoulders too.
Dang.
It didn't fight as good on Friday.
Because she is heavy. She's so heavy in all the things that, are being punished.
Oh, yeah. Couldn't even hold this level. What level is that? That's a very important level there. Couldn't even hold it.
No, thank you. This one has, and she's okay with it, because she's thinking 5-10 years out.
That's why I'm okay with it. I'm fine with it. I invest for the long term, and I trade, to fund my long term investment. So I'm fine with it.
Yeah.
You know what, man? She mentioned this whole bond situation last year, man. I didn't really listen to her. I was like, what is she talking about? I don't see no problem in the bond market. But she mentioned this last year. But she started as an economist though, so she knows all of that. She knew this pain was coming, man. She saw it.
And she's using it as an opportunity to get heavy.
Yep.
Heavier.
Yep.
So she's definitely doing some buying.
So this doesn't look as good as, some other things. I'm not too happy about it, but I'll take that pain for now.
And what's the price now? It's like
117. I initially bought under 100 last year. So forgot what.
You're doing all right.
Yeah, I mean, it's still one of my favorites. I'm in it. I'm in it to win it, man. I'm in it for the long haul.
Yeah.
Let's go to Square, one of her biggest holdings.
Yeah, Square is definitely one of her biggest holdings, and it's performing just like her.
We tried to hold this right here, though.
We tried. Actually, I got a piece of that tail action.
Okay.
Yeah, I got a piece of that.
And rolled it back up. That's what I'm talking about. Look at that drop. 190.
That's the only way. Because my week was looking bad. But it's coming. It's okay.
Shouldn't stay here long. It didn't stay there too long. Shouldn't stay here long either.
Those are those moments where your head drops in disgust, like, man.
Imagine
thankfully
losing millions of dollars. We're not losing millions.
No, we're not.
Our managers are losing millions, and they had to liquidate. They had to cut some positions.
No, I wasn't in during that downturn. Not the whole part of it, but I took a couple L's in it, and then I got on track, and I turned it into a nice profit by the end of the day. But it was depressing. Because I think that bottom is 191 something. The bottom of that tail there.
Yep, 191.
Yeah, I was sitting right in front of my screen, head down, typing an email on my phone, and I look up, and this damn thing has gone up 9 points.
Man.
And then I saw I had chipping away at my losses.
Let me see.
So
Take a look on a shorter time frame. I want to see what that looked like. 5 minute. Okay.
Mm-hmm. So it came right down there, went up to what is that? The yellow is what, 50?
Yeah, 50.
It came up to that 50 period, which is probably around 200 at that point. And then it kind of petered out a little bit, and then it started taking off. I got in at 201, sold a little bit, got in at 203, ended up losing maybe a couple $100. Then I got in about 208, and I rode it all the way through.
Yeah, it fought back. I don't like that it didn't get into this, like this first down bar of the day. It didn't bite into that. It didn't get back into here to retrace any of that. But it recouped all of this one, all this drop from the day.
Yeah, it recouped everything except that first big price bar. Yeah. And I think, and actually, what was the first price? What was the top of that bar? That first price bar.
Let me get off this. Top of this, 222. 220.
Yeah, so 45. Yeah, so it looks like in the PM market, it went up to about 218. So it started eating into that in the PM market. So people were still buying after the close. Like, I'm encouraged, but I'll tell you what, we ain't giving it all back. I'm gonna put a nice price point on there. And
that's what Palantir did.
Yeah. I'm actually looking at, where did it close at? Almost 26?
24. Tried to hold 24. It's not too bad.
What was that, 21? Is that the low? 21?
20? Man, it didn't lose 20 though. It kept 20.
Whew.
Let's see when the last time it was that low. Okay. It hasn't closed under that zone since back December.
I'm actually encouraged by this MACD though. Check out the MACD.
Oh yeah, that's why I stayed in it, man, because it stayed green. That's why I stayed in that trade, man. That's the only reason.
I'm encouraged by that MACD.
That's the only reason, man.
Yeah, that could be interesting tomorrow.
Through all of that negativity, man, it stayed green, yo.
Because that's what I thought 25 was the support level. I was like, you know what? I'm starting to see support around 25. So I already started, just keeping an eye on it. I don't know if I bought any, because what I tend to do in something like this is I might buy one share.
Yeah.
I'll just buy one share. And that will keep it on my radar, and that'll help me to understand how it's fluctuating up and down. And and maybe each day I'll just buy another share. Yeah. And then just try to keep averaging in that way. And then when I really start to see, because it's headed towards a MACD crossover.
Oh yeah.
You can see that. You can see that. So when that happens, because it's such a popular stock,
I hope this happens again.
Brother. That might happen tomorrow morning with that news for AWS.
I'm gonna keep trading it, man. I like it. It's right there with AMD now as my daily traders. I trade this.
I noticed you've been trading it every day. You know what I mean? Like,
I like to stick with something for a while, man.
So what is it that you like about this?
The price action. It kept this throughout the whole week, throughout all of that turmoil.
It has, because it actually started pulling back before the whole NASDAQ was pulling back. Because remember, they didn't like the quarter.
Yeah. And
it started to pull back then. And it's just never, but it's kind of holding up, even though that 20 is I wish I could have gotten it there. Yeah. Okay. So let me see if Desmond. Let me check in on Desmond. See if he got anything that he wants us to look at. Desmond, you there? Still at the counter? Oh, we can't hear you, brother. Hold up.
Yeah, give me 1 second.
Okay.
All right.
He had to drive through.
Let me jump on. All right, I'll talk to you later. All right. Okay. Sorry about that, y'all. Well, what were you saying? I'm sorry. Jesus Christ, I'm trying to do too much.
Hey, I'm glad you joined us. Did you have any stocks that you want us to pull up on the because we're recording, just so you know, we're recording this. So
okay.
So you'll be able to see it later.
Okay, so basically what I have, here's how I just started doing it, right? I was initially just playing around with it, just getting my feet wet and really just understanding the trends and just learning about how to do it best rather than just speculating, right? So I've just been going through literature and just watching and trying to keep up with things. So what I ended up doing here recently was so I own my own company. And so I started a 401k plan through my company.
Yeah.
And myself as an employee.
Mm-hmm.
And what I did was I picked a fund that had the things in it that I want, that added some. It was like a Vanguard growth fund.
Yeah. Sure.
That has I have it. Let's see, I have it here. It has I guess the typical large ones, right? It has Apple, Microsoft, Amazon, Facebook, one called Alphabet.
That's Google.
Yeah, it has Johnson and Johnson. It has the Home Depot and Procter and Gamble. Yes, it's like yes, basically.
What's the symbol? Do you know the symbol?
It is.
Sounds like it might be voodoo.
I just know it's Vanguard. I'm looking at it on my phone, and I just have my screenshot.
That sounds like it's that S&P.
Yeah, it's a Vanguard growth because they have a couple, but I saw growth for this one, and I figured it was probably big tech, but yet it has some stabilizing. It has some stabilizing ones
stabilizing.
In there. So that way, if some fall off, there'll be others to kind of keep it level. And I felt comfortable with that, and then taking this route because that's more. I guess I've gotten more, and I wanted to get long-term setup first.
Yep.
And be okay with that before I start playing around with 1,000 here, 1,000 there for that day to day, because it's been getting so busy for me that I haven't had time to sit and do what I need to do. So what I'm doing as an employee, I'm contributing 10% out of the salary I'm paying myself from my company, but I'm contributing 10% per pay, which is every 2 weeks, into that Vanguard fund. But as an employer of myself, I'm matching it.
Yes, you're matching it.
I like it.
Yeah, I'm matching it.
This is a hustle, man. Yo.
Yeah, I'm matching it with another 5%. And so what that does is it allows me to, I'm reducing taxable income on both sides. And
you're building wealth.
Yeah, right. So, and then what I turned around to do was I bought a combination with Mass Mutual. I bought a combination term and full life insurance policy. One for, I got a 50 whole and 500 term for 30 years with the 10-year conversion period.
Okay.
So I kind of went long term, kind of looking at the stability and what will be left over beyond me. And then, once I got those things set up, I was going to start going into let me jump into the, I know Vegas is going to open and, travel industries and the Royal Caribbean and, all of those. Then I could do that once I got that out the way. So
let me ask you this, Desmond, since we're on the subject, like what business are you in?
I'm in IT. I do contracting for Food Drug Administration and Department of Labor. So I just do voice over IP implementations and project management.
Gotcha.
Good stuff.
With them as a whole. So
you pay yourself. That's a brilliant. So basically, your employer, which happens to be your own company, matches the 401k up to 5%.
Yes.
And then you can choose to do whatever you want beyond the 5% as an employee.
Right.
It
Right.
so happens that you are both employer and employee, which means
Yes.
you're getting 15%.
Right. So I figured, I mean, we had the E-Trades, the Webull, and, you know, all of these different ways to do it. So I figure, wait, I have this right here. If I'm already dealing with Paychex is my payroll company.
Sure.
So they sat down and just really, it's a young lady from the area that's actually my representative for the 401k. She sat down and just really laid it all out. Once I told her where I was mentally and what it was I was trying to achieve, I'm not really looking to be cash rich or this abundance of liquid right now. I want to really have some foundation for moving forward, because I mean, even though my kids are older and doing their thing, you know, if I have an untimely expiration beforehand, I want something to be here for them to continue, and not have to go through what we went through. So I took that route, and I figured between the life insurance and that, it kind of get my mind going in the right direction. Before I start playing around with, you know, oh, I have this free money, that free money. I figured I'd go that route. And
that's brilliant,
you know,
man.
Before
and
I go to real estate. Thank you.
that's like man, that was unexpected good news, man. I'm definitely here for all of that. How long you been in business?
Since 2013.
Gotcha.
But in the past 3 years is when I really looked at it as a business and not just a 1099.
Yeah.
Gotcha.
Before I looked at it as just a 1099, I'm just getting this, you know, you get these large checks and don't think about the tax ramifications and all that. But as I, you know, start to surround myself with people of a different mentality, you know, I kind of looked at it as I'm not just a 1099, it's a whole business. And these are the things, these are the ways you can benefit, because I'm paying all this money for these freaking services of a business. You got the PO boxes, the different answering services and all of that. You're operating like a business. So take advantage of the service of the things tax-wise that are offered from a business. So you have a full C corporation, a full 802 C3, what is it? The 501c3 nonprofit organization. I have like all of these things, but yet I'm paying money routinely for. I'm taking them for granted. I want to go to the mall.
He breaking up because he's driving. He probably went in the bed.
Oh yeah. How about now?
It's better now. It's better now.
Okay. Yeah. So when I got my mind in the right place and I stopped my values, you know, just became other than myself, then you know, my whole mindset started to shift. And that's when, you know, I started doing research and speaking with those that, you know, are where I want to be. It kind of, you know, led me in the direction that I went. So
man, thank you, Desmond, for that. That's a good Sunday morning word right there, man. I'm glad I got that in my system. That was good, man.
Keep doing what you're doing, man. Keep doing it, buddy. Keep doing what you're doing.
I'm glad
so I don't turn down any knowledge from anywhere, because, you know, sometimes you don't have time to read charts and do all of that. So I had to really start looking at things that would be more residual, like understanding stop and starts on the different systems, so that they can sell when I need them to, and, you know, buy when I need them to, and all of that. So I had to kind of put mechanisms in place that could do it when my attention is all over the place, you know. So, and I realized that requires, you know, research and conversations, and you have to be a student all the time. And learn from everyone. So when I saw the invitation today, I was like, man, I remember when they first put it out there, I said I was going to join, so I got to join. If for nothing else, just to jump on there and hear. You never know what you might hear. So,
well, if it's anything,
that's kind of where I am. I have that.
If it's anything you want to want us to go over, since you joined us, you know, definitely put it in the group so that we can kind of plan on it. We only do this monthly. We only do the group form monthly, but we do the weekly. Jamario and I do the weekly one. But really, we want to start getting people to, if you're making trades throughout the month, whether it's long term or investments, you know, we want to come on and monthly and just kind of see where everybody is and and encourage people and give people good sound advice on what to do next. So
I like that. Good
and then share. Yeah, good check-in once a month. So definitely, man, I'm glad to hear you in you at FDA. So that's what's up, man.
Yeah,
I've
FDA
been doing
and DOL right now. For the most part, FDA has different limited resource hours for behind the scenes VoIP support, and DOL is where I've been spending the majority of my online time. You know, they give me, it's all under Verizon, subcontracting under Verizon. So I'll get a bundle of hours that might cover 3 months, 6 months, or maybe even just 30 days, and it'll just keep renewing. And so I just had to find a way to, you know, I guess COVID and, you know, the instability or the volatility of just the workplace and the market over the past few years just kind of forced you into hustling, but hustling the right way and trying to get you to think, man, if everything just goes to heck in a handbasket here, how can I still make it? What can I do? Then you realize, you start looking at everything as a tool that you can use. Man, I got all these books right here. I got a computer, internet, and a phone. I can make something happen.
Yeah.
So I just, you know, just started doing that, you know, looking at researching Roth accounts, how I could get around that. You know, I found out that I can combine a Roth into my 401k plan that allows me a lot more money than just going straight to a bank. The bank will give you $6,000 to $7,000 yearly for a Roth. If I put it in my 401k, I can max out 19.5.
Yeah.
Provided that funding was there, you know. So I just kind of spend time learning however I can so that I know what to do when I do get a dollar by putting it out there and letting that dollar work. So I appreciate what you guys are doing.
I appreciate you joining, man. So does anybody have anything else? Mario, you got anything?
No, sir. No, sir.
All right. We went over Melita. She got BP. She has the best portfolio, sound like, of anybody in the group.
Yeah, I took some notes on that too.
Man, it's like y'all. It's like y'all are sharing this information, and then I'm naturally curious. So I'm going in and looking at the charts and, you know, using the language that I didn't have before to understand like what I'm looking at. And I'm like, oh, this is a good time to buy this. And then I buy it, and then I'm like, oh, it went up. Oh, it went down. It's okay, you know. So for me right now, like I'm not gonna say that I'm completely risk averse, but I definitely want to get comfortable with being in the market and, you know, the volatility of it first so that I can build the emotional fortitude for it, and then start, you know, options and, you know, putting $1,000 in something, you know, that type of thing. So I just kind of want to at least understand what I'm doing first. But this group has been so helpful for that. Like a lot of the stuff that I'm doing, I wouldn't have known if it had been from asking, you know, worrying Thomas half to death, asking him 17,000 questions, and then talking about it in the group. I'm a chatty patty, so I'm like, hey, what is this? Hey, what is that? And to like and to speak on like what I think his name is Desma. Is that your name, Desmond?
Yes.
Okay. I'm an employee, but I own my own company too. But I also do the same thing. So my company gives me 5% and I put in 10. So I'm getting about 15%, you know, for my 401k and portfolio every month as well. Like, so it's, you gotta do what you gotta do. I need to get some tax breaks somewhere. So
tax free.
Yeah. Yep. So yeah, that's cool. But I don't have anything else, Thomas or Jamaria.
Okay. All right. Well, good meeting, good forum, man. We definitely, Desma and Melita came on and stole the show.
Sure did.
man, with all the insight. We got tax breaks. We got hustle. We got 401k. How to get your money, fund your investment account through your own business. That's a hustle right there. That's not even a hustle. I shouldn't call it a hustle because it kind of minimizes it, but that's game. You know what I'm saying?
You're doing it right.
That's the right way to do it. Jamar, are you on a business?
I do. I own a couple, man.
Yeah.
Mhm.
So definitely we got to look into that game, man. It's free game. Desmond came in to drop free game
On a Sunday. That's
on a Sunday. Free game on a Sunday while he just driving around. We amateurs, you know what I'm saying? He driving around.
Whatever.
With the sun shining in his
with his
face.
shades, the aviators, you know what I'm saying? The valley, you know what I'm saying? Let me go ahead and drop in on these clowns and let them know.
Introduce myself. I like it, man.
So good stuff, man. It's on you, man. Jamar, you can call it, man.
We're done, y'all. We'll see y'all next week. What's the any topic for next week, Tom? We're just gonna see what comes up or
see what happens in the week, man. See what happens. We know our format. Look for our video. Definitely subscribe to our new YouTube channel where we're focusing on these stocks things. So I'll post a link. We'll post a link.
Okay.
And share it amongst your folks, man. If you find it valuable, man, share it, please.
Oh yeah. Let's learn and go together, y'all.
Okay.
Yes.
Sure.
Thank you so much, guys.
Thanks.
All right. Have a great Sunday.
Thanks everyone.
You're welcome.
Peace.
All right. Talk to y'all later.
Okay.
Bye.